The following episode of the Maui Chamber of Commerce's Business Matters was originally broadcast on May 12th, 2026.
Welcome to Business Matters, brought to you by the Maui Chamber of Commerce. Now here's your host, the president of the Maui Chamber of Commerce, Pam Tumpop. Good morning, Pam. How are you today?
Aloha, Gary, and good morning. I am excellent. How are you today?
I'm doing good too. It's gonna be a good week. I can feel it.
Oh, good. I can feel it too.
All
Although
right.
Today I'm going to talk about some tough news. So
Well, somebody's got to do it.
somebody's got to do it because it's really not about what the news is. It's really about how we take the news and how we prepare forward.
Right,
And
exactly.
address things. Yeah, so that's what we're going to talk about today. And thank you, Gary, always for your amazing work to produce our show. We really appreciate you.
Thank you, and thank you for your work.
Thanks. Well, folks, today I am going to dive into some critically important issues that directly affect every family, every business, every taxpayer here in Hawaii. They're going to impact us across the island, certainly here in Maui. We're not alone. And it's going to happen, of course, across the nation. So today's program is about understanding the bigger economic picture, because when people understand the facts, they're better prepared to protect their families, their businesses, and our community. So today we're going to talk a little bit about what's happening in America's debt and Hawaii's true fiscal condition, including why some watchdog organizations report numbers much higher than official government debt figures. So that will be excited the first segment. And then we're going to talk about why America crossing the dangerous threshold of debt exceeding GDP, gross domestic product, matters, that what history tells us, why businesses should care, and what this means for taxes, inflation, and future government programs. And then thirdly, we're going to look at Hawaii's food insecurity crisis, housing affordability crisis, and poor business competitive rankings, and how those compound these national fiscal pressures. And most importantly, what solutions can help us move forward. So this is going to be kind of an eye-opening conversation this morning, maybe not for some, maybe for others, a little bit of a shock. But this is not about fear. This is really about education, preparation, action, right? Because the more we know, the better informed, and the more we know, we're better informed, the more we can do about situations. We can ring in on things. We can explain where we're at in this cycle to our family, to maybe our employees, and let people know what's coming and how can we best prepare. So we're looking for, preparation and action, because Maui's future depends on understanding the challenges ahead and creating new solutions and starting to work on those right now. Of course, at the Chamber, we've been working on many of these things for years. And so that's why I felt that given the recent national news about where we're at on our debt ceiling, I felt this was critically important to address today. So you've got me this morning, and I'm going to share all about what's going on. So right now, the official U.S. debt as of spring 2026 showed the gross U.S. national debt at nearly $39 trillion. We have been leaping forward in debt by trillions of dollars. Now, you're seeing this on the national news, but this is getting to a staggering rate. So when we look at the debt, they also look at how much debt is held by the public. And approximately $31.3 trillion is publicly held debt. And the U.S. Gross domestic product is roughly $31.2 trillion. So this means that for the first sustained period since World War II, America's debt held by the public has officially surpassed the size of the entire U.S. economy. Okay, take that in for a moment, because that's huge. Our debt surpassed the size of the entire U.S. economy. Okay, so why does that matter? Well, debt held by the public is debt most economists focus on because it represents actual borrowing from individuals, from businesses, from foreign governments, from investors. This debt must be financed through taxes, borrowing, inflationary monetary policy, and spending cuts. So there's an organization I've been watching for years called truthinaccounting.org. And Truth in Accounting reports much higher numbers than the numbers I just mentioned to you. Okay? And here's why. Organizations like Truth in Accounting, but sort of Truth in Accounting is my go-to source, they use what we call full accrual accounting. Full accrual accounting is what we use generally in business. That's what this is meant for private sector standards. These are just private sector, meaning business accounting standards that most are using. So this means that they include things that are unfunded, like debt that is on the books in the future, but there is no funding for it currently. Unfunded Social Security obligations, unfunded Medicare obligations, federal employee pensions, veterans benefits, long-term liabilities reflected in standard budget reporting. So these are things that, long-term liabilities that are not reflected in, I was like, that didn't make sense. Long-term liabilities that are not reflected in standard budget reporting. So some of the information that we see in the government budgets are not including these long-term liabilities, and therefore they're unfunded. So when the time comes, that money for those things is going to be needed. So truthinaccounting.org reports that the federal burden for these unfunded liabilities is approximately the whole federal burden, including these, wrapping them in, is approximately 158.6 trillion. Okay, that's very different than what I just mentioned, with the gross national debt at 39 trillion. So you can see these unfunded liabilities make this number drastically higher when you include the promises already made, right? These are important benefits that are already made, but not fully funded. Paul Brubaker made a joke on this about Friday, telling all the young people, get out, work, be really, really productive, because we need you to fund our Social Security for those of us who are older. Because if our GDP, if we're exceeding our GDP, we're in trouble. So a simple explanation of this is official debt equals what government currently owes on paper, okay? But truth in accounting debt equals what government has promised overall, including future obligations they committed to. So here's an analogy. If a family were to say that they only owe on their mortgage, but ignore their future pension obligations, their medical bills, any retirement promises that they were made, they may appear financially healthy when they may, healthier than they may truly be, because they may not be that if some of those things don't come forward as expected. So the same applies to government. Hawaii's fiscal position, according to truthinaccounting.org, who ranks all of the states across the nation, showed that Hawaii remains among the states with significant unfunded liabilities due to pension and retiree health care obligations. Hawaii ranks in their lower tier nationally for taxpayer burden when full obligations are considered. While Hawaii's direct debt may appear manageable, long-term obligations create substantial future pressure. So locally, this matters because these obligations can contribute to higher taxes, reduce public services, pressure on business costs, infrastructure limitations, and reduce competitiveness when we're trying to attract other industries so we can diversify our economy and have more resiliency. So these numbers are frequently looked at when industries that could provide higher paying jobs, that could give us more diversity so that we're not as reliant as we are today on the visitor industry, right? And give our youth jobs that help them afford to be able to purchase homes in Hawaii. It makes us less competitive in the national market for attracting these types of industries. And we've been talking about this for years. I've been with the Chamber 20 years last month in April. And this is a critical thing we bring up each and every year, because where we fall in these national rankings really affects how businesses that might move to Hawaii view us. So these issues and these pressures for our state and for Maui means that government financial stress can affect, and actually we explain how it directly affects permitting systems, infrastructure investment, workforce support, disaster resilience. When we talk about permitting systems, we're talking about permitting systems critical to developing needed, attainable housing. We're stopping the word affordable because that just is out the window these days on what people can afford. We need attainable housing. So for everybody listening, our government debt numbers vary because of different accounting methods who measure things differently, right? And we need to look at why they measure things differently and what the true realities are. So a quick takeaway on all of this is that official debt tells us our current borrowing levels, but the full accrual debt reveals the broader long-term burden, okay? We need to know what those burdens are. So like we would do at home when we have to plan for some of these things and understand, both matter and both indicate at this point serious financial challenges. So even if you don't look at the truth in accounting data and you don't look at the unfunded debt and you just look at the numbers that government is reporting, okay? And it's all across the nation now. But that's why I wanted to bring it here. I mean, we're just hearing red flag after red flag after red flag because, again, even with what they're reporting, which is considerably lower, right? The debt held by the public is now $31.3 trillion, and that exceeds the U.S. GDP, which is 31.2. This is a crisis time. Has it happened in history before? Yes, it is. But this is a time where we are in crisis, and we have to look seriously at this and be ready to make some changes and plan forward. So a little bit about GDP. Debt to GDP compares national debt to the total size of the economy. So think of it like this. If your household owes more than your annual income, lenders begin questioning your long-term stability, right? So if you're in trouble financially, then they start to question your long-term stability, which is why many people pay exorbitant interest rates because they're sort of projecting that they're going to have trouble. So this principle applies nationally. So the current U.S. position indicates that debt held by the public is 100% of GDP, 100+% of GDP. So gross debt is far higher, projected by Congressional Budget Office to rise by 120% by 2036. Okay, so 120% by 2036. 10 years from now. Imagine that. Okay, the last time this happened was in World War II, between 1945 and 1946. Back then, massive wartime spending, temporary emergency conditions, rapid post-war industrial expansion helped reduce the ratio over time. But today is different. Today, our current debt growth is structural. So while we are at war, or it depends on who you ask on any given day, but we have to look at things more comprehensively now. So again, this isn't the kind of war we saw in World War II, but our growth debt is structural at this point. So it's driven now by entitlement spending, an aging population, interest payments, chronic deficits, political unwillingness for reform spending. Okay, so this is not a temporary war spike. This is now a long-term trajectory that people are looking at. Okay, and it's some of this, of course, it's not all in this current administration. Our debt has been rising for considerably rising for over the last decade in leaps and bounds that we, again, hadn't seen before. But we've been seeing it. We've been watching it go up. We see where government does a government shutdown as they address the budget and they look at this spending and they look at unfunded liabilities, but are not reporting on those the same way. And so this has been an ongoing problem that we're continuing to face. So why should businesses care? Well, rising debt leads to higher interest rates. Government borrowing competes with private borrowers. And so this results in higher business loan rates, more expensive mortgages, increased credit costs, and slower investments. Okay? And again, anytime businesses' expenses go up, okay, they have to pass those expenses on in their products and services. Otherwise, they are not viable businesses. They will go under and not be able to provide those products and services to consumers. Okay, but this doesn't just affect businesses because it also affects higher taxes. So to service the debt, corporate taxes might rise, income taxes, our income taxes may rise, our excise taxes may rise, fees may increase. So this is a challenge for all of us. And then it passes on to inflation risk. Government may directly reduce debt burdens through inflationary policy. So as we look at those policy measures, we could see higher food prices, higher fuel prices, higher wages without matching productivity. So they try and raise wages, but without increased productivity, there are challenges. And I know people are going to say, oh, that's all going to be solved by AI. Well, there are some issues that are going to be solved by AI, but there are some issues that AI is going to solve also that may equate to job losses. Well, let's not say may. There are some circumstances, since I'm saying some, that will definitely equate to job losses. There are other things where people will be repositioned or using AI in different ways. But we have to start looking at this comprehensively. And there could be reduced purchasing power. So there are huge things that are going to impact us all. Then we look at what happens when there's reduced federal flexibility. Okay? So more debt service means fewer dollars for federal spending. It's just the way it is. If they have to pay on their debt service, like we have to pay on the debt service for our mortgages, that comes up front, right? So then the less federal flexibility in the spending they have can mean fewer dollars for infrastructure, disaster aid, housing programs, small business support, and defense. So notably right now, federal interest payments now exceed $1 trillion annually and surpasses national defense spending, right? So we have over borrowed, okay? And you know what happens when you have over borrowed on land or a home and you can't pay your debts? They take it back. So what happens on the U.S. level, right? We have over borrowed and we have a challenge, okay? I used to joke that China, who holds a large part of our debt, might come take some portion of we might give them some portion of the U.S. I mean, I highly doubt that that's true, but think about it as you would think about it at home, okay? I just joke about that. But the bottom line is, when you overspend and you can't pay your debt, there has to be a payback. What is that payback? Okay, so risk to Hawaii specifically. Hawaii depends heavily on federal spending, a military presence, tourism, imported goods, and lately and especially, both with what we've seen through COVID, of course, our Maui wildfires, and the recent flooding all across the state, you know, a strained federal government could significantly impact Hawaii's economy faster than many mainland states, right? We are an island chain separated from the continent, and this is a challenge. And it also means we have higher costs as a result of that. So the bottom line is high debt doesn't mean immediate collapse, right? But it does mean slower growth, greater vulnerability, higher taxpayer burden, less resilience during future crises. And for business leaders, this means planning conservatively and strengthening local resilience now. And I want to say it does for households as well. Plan conservatively, save more, look at where we're spending, be more cautious, because this is a time when we need to look at resiliency. It's also a time when we're already dealing with compounding crises in Hawaii in terms of food, housing, business competitiveness, a slower economic situation. And so we have to really, again, look at all of these things and analyze what's driving them and what can we do about them. And to understand where we're at, it's really important to look at the statistics. And so in all of this, I wanted to take a moment before I go into, our Hawaii situation. I wanted to just share a list of where we got some of these statistics from, because I want you to understand as I'm sharing this data, especially as I get to the Hawaii portion of the data, I really wanted you to understand that we're looking at important statistics that I think you will say, okay, these are credible statistics. Now, they're not my statistics, right? They're statistics that we're drawing from, important sources that publish regularly these types of statistics. So before I get into the Hawaii stuff, I just want to let you know, like on the national debt level and fiscal analysis, we're getting data from the Congressional Budget Office, known as CBO, with their budget outlook for 2026 to 2036. The U.S. Treasury fiscal data, a Committee for Responsible Federal Budget, truthinaccounting.org, which again I mentioned has been doing these numbers and talking about unfunded debt when government budgets don't really go behind the curtain and share all that, right? But in business, we have to look at that. If we don't look at that and we don't fund those things for our employees, it's criminal. By the way, it's criminal. So truthinaccounting.org is a great thing, and you can look at it, truthinaccounting.org.com. Truthinaccounting.org, no .com, truthinaccounting.org. And it will blow your mind. There's a ticker on the front page that shows you how quickly the debt is escalating. But they have a financial State of the Union 2025, and we drew from their latest report. We also looked at CBS News, their May 2026 debt to GDP coverage. Now, on the local level, and the statistics I'm going to share with you now, Hawaii fiscal and economic conditions that we're going to be talking about, we do look at truthinaccounting.org because they have a financial state of the state, and we pulled from their 2025 report, which is the latest report. We looked at Hawaii DBED economic reports. We looked at the Hawaii Food Bank Food Insecurity Report for 2024-2025. We looked at the ALICE report, the ALICE Hawaii report for 2025. We looked at the Hawaii Business Magazine Economic Outlook for 2026. So these are all things that we're looking at. And this matters, right? I want you to have some confidence in the, I'm sharing something overall that you can easily find if you take the time to look this up. But I want you to see, where we're actually going now and why this is really critical to Hawaii and the things that we need to look at locally, because now, this all compounds Hawaii's crisis. We've got food insecurity. We've got a housing crisis. We have to address our business competitive issues. We need economic diversity, right, and sustainability. And we're still in a very large recovery mode. So let's talk a little bit first about Hawaii's food insecurity crisis. Recent Hawaii Food Bank data indicates that 32% of Hawaii households are food insecure. Okay, 32%. Okay, that's huge. So approximately 1 in 3 households struggles with reliable food access. And where does most of our food come from? It comes from the mainland, and which means that we have, and excuse me, I know we're working more towards continent. I've lived in Hawaii a very long time, so I'm struggling to change, but I'm working on it. But that means that, a lot of our food items are shipped in. And as you know, we've been dealing with a young brother shipping rate increase issue that was passed. And we're still fighting it because there's still an opportunity to go to the government. But this impacts our food security. So Maui and Hawaii counties show some of the highest food insecurity rates statewide. And by Hawaii, I mean Hawaii Island counties. So Maui and Hawaii Island counties show some of the highest food insecurity statewide. Key drivers for this are high cost of living, heavy import dependency, shipping costs, housing burdens, and low wage to cost ratio. So why does this matter? Food insecurity is not just a social issue. It impacts workforce stability, health outcomes, educational outcomes, productivity, and local spending power. So we have been dealing with this for a while. Okay, this is not new. We've been dealing with this years ago when the Alice report first came out. They were flagging these things. There was a lot of press. Okay, and for those who do work at the legislature and deal with, county and state government processes and budgeting and issues and bills and legislation, we're familiar with this because the Alice report is reporting a lot of great statistics, and we're constantly working on this at those levels, right? And at the chamber, of course, trying to, as I say, always, it's 1A and 1B on any given day. We're trying to always address our economic crisis and our housing crisis, and also, which has broad impacts across the state. And our food insecurity, so many of our nonprofits are fighting very hard to address our food insecurity crisis. And I will do a shameless plug because I do sit on the board for Feed My Sheep, but they feed the hungry across the island in different locations. And again, they and many others like the food bank are doing amazing work. But the challenge is the crisis still exists. And so we have to start fixing the root causes. Again, I'm not trying to do shock and alarm, but I'm trying to say without education, sometimes these things go by in a much slower period. And this is a time where we have to say, no, this is a time for action. There's a lot that we're going through, but we need to be educated, informed, and take action. I think if I were to ask anybody in a crowded room if Hawaii has a housing crisis and if Maui has a housing crisis, I think probably every hand in the room would go up, okay? Hawaii consistently ranks among the least affordable housing markets in America, and Maui is up there. Challenges include limited land, very slow permitting, high construction costs because materials are shipped in, regulatory burdens, insurance pressures because of disasters and things that we've had, we've had insurance pressures before, but our recent disasters have, raised those to a level, and there's been a time where we've seen insurance companies exit Hawaii as well. Workforce displacement. So that is resulting with residents leaving, right? We keep hearing about more and more, especially in especially in Maui. We've seen a lot of people leave. They're going elsewhere. They're trying to find more affordable housing and higher paying jobs. We've seen workforce shortages. Businesses are struggling. To find employees these days. And employees, many families are dealing with a lot right now. We were seeing reduced business expansion, increased homelessness risks, and greater inequality. So for housing, that would be Maui housing. For Maui housing, actually it's kind of funny for housing. For Maui housing, it's one of the greatest threats to our economic sustainability. We really have to get a handle on this. We really need the public ringing in. And when I say ringing in, I don't mean demonizing others. I don't mean, being negative, being nasty, being ugly. We have a crisis. That negative energy doesn't help solve the crisis. What we need are positive solutions. We need to unite and work together with government. We need to unite and not divide groups because somebody's angry or, has a louder voice. What we need to do is get to real solutions and work with our legislators to make the meaningful differences that are lasting, not shots in the dark, a little bit here, a little bit there, and say, okay, we've solved the issue. We haven't solved the issue. We need attainable housing. We have to address Maui's business climate challenges. Hawaii frequently ranks. Boy, I'm combining words today and making things up as I go along. Excuse me. Hawaii frequently ranks poorly due to our high operating costs. Our energy costs are high, right? And with fuel prices, our energy costs, HECO has reported higher costs because they're getting higher costs. Our shipping costs are going up. Again, Young Brothers just got an they just got a rate increase of 25.75% that hit this January. And the legislature in these times just passed an automatic Young Brothers rate increase again. Now that will go to the governor. And we and others will be telling the governor, this is not that time. Now, they didn't cause the housing crisis, and they didn't cause the economic crisis, right? And they didn't cause our food insecurity. But we need them to be a partner right now. And most importantly, the Public Utilities Commission, which is our regulatory office to protect the public, the PUC said no increase for 2 years. So while lawmakers pass this, I really don't know. They've had their reasons, and they feel like Young Brothers is trying to say they need help, and they're saying, well, we need to keep Young Brothers. Well, we do, and they have a monopoly, and they're required to provide inter-island service as part of that monopoly. So this is a huge issue for us. In addition, we have high tax burdens, we have a lot of regulatory complexity, and we have high land costs, which makes it really challenging to build attainable housing. Okay? And with higher interest rates and having to pay more in taxes, it's going to be really hard to make things more attainable when these broken systems are compounding. Okay? So for businesses are facing reduced competitiveness, lower margins, difficulty retaining workers, and slower growth. And so those are huge challenges. When federal debt rises, right, we have to connect these issues with our life. So when federal debt rises, Hawaii may face reduced federal aid, greater pressure on state taxes, higher borrowing costs, less infrastructure funding. Less infrastructure funding means higher costs for housing as well, because when government isn't funding infrastructure, then developers have to add that additional cost and pass it on in housing prices, and reduce Social Security safety nets, as well as social safety nets. Okay? So in short, Hawaii's vulnerabilities are greatly magnified by national fiscal instability. I take this all in because this is very weighty, right? This is where we're at. And I know this probably feels extraordinarily heavy this morning, but now let's talk about the solutions and the path forward. If we turn a blind eye to problems, they grow. If we pretend they don't exist, they grow. If we don't wrap our hands around the data and get an understanding, then how can we come up with solutions if we're just taking everything as status quo and just letting it be, or thinking we can't make a difference? If we think we can't make a difference, we're right, because we won't. We'll get stuck in that mentality. And so then we don't take the needed action. We don't come up with the unique ideas. We don't come up with the energy to do the steps to move things positively forward. So I want to share some ideas. Some of them are national, some of them are local, but this is a government of the Republic, meaning the people have a voice. It's our voice. And again, at the Maui Chamber of Commerce, we do legislative work, some on the federal level. We do ring in on federal issues that have great impact to Hawaii. But we mostly ring in on state legislative matters. This year we tracked over 900 bills and rang in on a great deal of those. Some of them we watched and didn't feel we needed to based on the direction they were moving in, that were aligned with our views. Others we adamantly rang in on and track throughout the process. We deal with county legislation as well, and we work and track county matters through year round. At the state level, it's pretty much January through May, but at the county level, it's year round. And so it's time where we need to be looking at these things. And what I can tell you is there are people who champion things, and sometimes we have people who have a small group, but they're very vocal, and things can shift in government. When others are not ringing in to say, hey, this is impacting me. And at this point, we're getting to the point where this is starting to impact us all. And we might think maybe not. I mean, our real property tax might go up, in different areas, or we'll see, our state taxes go up, although they do look at ways, recognizing what's happening to offset with tax credits. But then, looming down the road are these unfunded liabilities, and things are changing in a very dramatic way right now. We're at a tipping point. We can't avoid this. This is a critical tipping point. And some may think, oh, well, I don't know, or I might do some more research on that, and that's fine. Please do. I encourage everybody, do your own research. I don't expect anybody to just take on trust anything I or the press or the president has to say. We want to do our own research. But do your research, because this is a critical time. And it is going to impact families in Hawaii, which is why we fought the Young Brothers thing. It is going to impact families in Hawaii. And when we were fighting the Young Brothers issue, I really wasn't as tuned in to this GDP tipping point now. And I am laser focused on where we're at, because this is a significant tipping point. This is a huge matter now on the national level. So let's talk about moving forward and what America needs to do. We have to look at deficit reduction strategies. We have to. We have to look at entitlement reform discussions, because we can't continue the high level of unfunded benefits that are soaring. And if we don't make entitlement reforms, it just grows and grows exponentially. We have to put in smarter spending controls. We have to focus on national economic growth policies. And most importantly, well, not most importantly, I think economic growth policies and spurring broader economic development, which means more jobs, right? Higher paying jobs, more wealth that equates to people being able to get attainable housing, to not have food insecurity, right? We need to build our economy and create jobs and positions that help sustain our families, not just here, but across the nation. But for people to fully understand these issues, we need government to be transparent in their accounting, and they need to be very transparent on the full accrual budgeting, because we can't just make promises on benefits, right, to our veterans, to our government workers, to Social Security, us who might be counting on Social Security. Some of us maybe in a few years, some of us right now, some of us who in 10 or 15 years that are working really hard and being part of that productive process, right, and trying to increase our GDP. But in a few decades, are our children going to have Social Security? I grew up thinking, I think in my 20s, I thought, I don't think I'll ever get Social Security. I'm still working. I'm still contributing. Am I ever going to get the money I paid in? What about future generations? We need to look at this, and we need to understand it, and we need to make important decisions and be a part of the process and raise our voices and collectively say, we just can't keeping on. We've got a whole series of crises. So let's take it down to a local level. For Hawaii, we've got to do housing reform. Permitting is a huge issue. Imagine you're a developer. Think about it if you have a mortgage on your home. And imagine you've got this mortgage on your home and you're going to build the home. So you bought the land and you have a mortgage and you probably have a construction mortgage for the home. And you've got the land and you're ready to build and you can't get the permit. And it takes a long time. So in the meantime, you're paying mortgage, you're paying interest rates and you're paying on the mortgage and you're making payments when you're probably also still living somewhere else, maybe renting, right? Maybe living with family if you're lucky or friends, or maybe not paying something else while you're paying those interest rates on a mortgage on a house you don't yet have because you're going to be building it and everything's delayed. Imagine what that feels like, right? Now you're having to pay in two places. It's a challenge. Well, when developers develop land and they spend a lot of money to come up with housing plans, and there's lots of costs on architectural plans and engineering plans and getting everything ready, and they're paying debt on that land, right, that they finance to build housing. And the longer it takes and the more delays they are, that cost has to be built into our housing. So faster permitting. Now, we've been educating and advocating on this for the entire 20 years I've been with the Chamber. And by the way, for decades before that, decades. This isn't a me thing. This is a Chamber thing. This is a Maui thing, and it's a Hawaii thing. And there was a speed task force to help speed up permitting. And we need to say to government, it's time to get on with it. There's new solutions. There's AI things that'll help review permitting faster. There are other places that are jettisoning forward in new technologies and methodologies. In fact, many other counties in our state outpace us and have better methodologies. Faster permitting is critical. We also need to look at alternative building methods, things that are cheaper to build but have the security and sustainability that we need, especially with the disasters we've seen in Hawaii. We need workforce to do the housing expansion. Here in Maui County, and it's happening across the state, but we have a heightened level of worker shortages because many of the people who were building houses are retiring. They're getting older. They've worked really hard to build. Unfortunately, for the last decade, we haven't been building as much as we used to, but now they're getting ready to retire. So we need to develop a workforce and develop it now. And we need more public-private partnerships. And this is where we can look at lands that the county has that we can put housing on and the state has. And we can look at infrastructure investment where the county and state can create partnerships and work with home builders to look at how we can get to attainable housing. Attainable housing is what we desperately need. But that's not our only issue. We've got food insecurity investments. So we need to change that. We need to really make food security investments. Because if we don't invest in food security now, right, that crisis will grow as well, especially with higher shipping costs. So we have to invest in local agriculture. Now, when I say invest in local agriculture, I've seen grants that we give to people who say they want to start a farm, and they're well-intentioned. And some take those grants and maximize it and create a great return on investment for the money the county gives them. Others start it, great dream, love farming, think they love farming, haven't really farmed before, and they get out and they get some money and they start to farm. But a year later, is the farm still going when they found that it's hard? There's pests. God help us with deer. There's big pests now. They're getting bigger. There used to be other pests. I mean, there's still other pests, but now we've got big pests that'll just eat everything. We have to look at this and we have to say, how are we making smart investments in local agriculture who is people who are going to produce and show a return on the county's investment long term to justify hopefully getting future grants and things to leverage them and take them forward to really build our agricultural community back, right? A large part of our agricultural community was HC&S. And so we really, have seen a big leg in that when we lost HC&S. Mahi Pono has bought that land. They are working hard, but with all that acreage, it's going to take quite a while And they're doing some amazing things. They're providing lots to folks who want to do agriculture. So we need to look at that. We also have to look at ag innovation and new technologies, right? We've got worker shortages. There are actually robotic machines that drive through rows of produce and do the picking and separate the picking into buckets of when that produce will need to be shipped. And by the way, what I saw and I'm talking about was a strawberry picking machine that was in a hydroponics growing environment, and so helping to avoid a lot of pests. And this was years ago, over 5 years ago. It might be 7 or 8. There is new technology. It's going to change, and that technology can improve ag and help us be more productive, which lowers our costs, which addresses our food insecurity. It also means job changes, so we have to look at that. We need to look at reduced shipping dependency, right? Our shipping costs, as I've shared multiple times during this program, are going up. The more we produce locally improves our food security. And we need community food resilience programs. So we need to get more community food resilience programs. And people like Feed My Sheep and the Maui Food Bank and other groups who are helping to feed the hungry are doing a great job. And farmers are helping us, but we need more, right? We need to address our food insecurity. And together we can do these things. We need economic diversification. We've got small manufacturing industries. Look at Garrett Marrero of Maui Brewing Company. What a superstar. Even won the best in the nation, Small Business of the Year years ago. We can do things, but it's higher, our higher costs to do manufacturing in Hawaii are problematic. So we need to grow from within. And there are many great manufacturing programs, and of course, on the national level, it's made in America. So if there was a time for local manufacturing, this is a good time because funding is going toward that. We need technology investment. We need to attract technology companies. Those are great paying jobs. And our young people are interested in so many of those. And they're diverse and they impact every industry. Like people keep saying to me, oh, well, I'm getting into AI, or AI is our economic strategy. Well, that's great, but AI applies to every industry these days. Literally every industry. It applies to, a lot of our work every day. A lot of us are using it on a regular basis, right? This is really important. So it's not just AI technology. We need to look at a lot of diversification, like robotics, right? And new systems, and we need to evolve. The world is changing, and on the continent, they're changing very quickly. And we also need to make those shifts. It doesn't mean we're giving up our culture and doing things in traditional ways. It means we're leveraging both. We need value-added agriculture, which means, again, ties into manufacturing. And by the way, when we have manufactured products like jams and jellies and things from our agriculture, right, if we've got canning projects, it also helps our food insecurity because they have more shelf stability. We need renewable energy, and we're going to have to continue to expand in renewable energy here in Hawaii. Of course, solar is phenomenal. We lost the federal tax credits for homes. It's still in existence for businesses, but has a sunset period. We need to change that. We need renewable energy, and that will help reduce our daily costs as well. Additionally, we need entrepreneurial support. We have to support our businesses. We also have to look at cost reduction, shipping reform. Again, we worked hard, but our lawmakers at the state level passed another shipping increase that will move us forward, automatic increases, and usurping the PUC's position. So that's a huge problem at a time when this is what we need. We need regulatory reform, we need tax competitiveness, and we need energy affordability. And lastly, we need long-term fiscal discipline. Well, I shouldn't say lastly. There's going to be many more solutions. And as we're educated, all of you listening, are going to have other ideas. We want to hear them at the Maui Chamber of Commerce. We want to help you engage in government processes and help address this. But we need honest budgeting, pension reform, and infrastructure prioritization. So at the Maui Chamber of Commerce, we are letting people know that we believe we can do this together, right? We can. This is yes, there is some dark clouds looming, but when we see rain, and especially now, we prepare. We're preparing forward now, right? We went from 3 days of food sustainability in a disaster to Mayor was saying, better get ready for 2 weeks, especially in cases of flooding and lack of access and issues, right? So this is about preparing forward. Let's be economic resilient. We need to address business advocacy, smart government policy, which will drive housing solutions, infrastructure investment, and fiscal responsibility. And we need collaborative leadership. Be a part of the solution. Our community cannot control national debt alone, but we can build stronger local systems, advocate for responsible reforms, support small businesses, strengthen food and housing security, and prepare proactively. So America's debt realities matter. Hawaii's vulnerabilities matter. Maui's resilience matters. Please, as we get more informed, be prepared. Protect your business, protect your family, protect our economy, protect future generations. That's why we remain committed at the Maui Chamber of Commerce to advocacy, education, solutions, and collaboration. Our goal is not simply to weather uncertainty. Our goal is to help shape a stronger, more resilient future for Maui County and Hawaii, and for our children, their children, and their children's children. We need to protect forward. We hope this was educational and informational for you. We hope you'll find things that you can do to prepare forward. And if you have solutions, call us at Maui Chamber of Commerce. We're easy to find, mauichamber.com. I hope you have a beautiful Maui day and send blessings and aloha. Please tune in next week, Tuesday, for another session of Business Matters. And in the meantime, blessings and a hui hou.